Welcome back to Trading with CJ. Now, a little while ago, I made a video on 5 different stocks that, in my opinion, are some of the worst stocks to buy and should definitely be avoided. And I still 100% stand by that. So if you want to see what those stocks are, then after this one today, go ahead and check that out. I'll leave part 1 in the link in the description below. And in that video, I also mentioned that there are a lot more other stocks on that list, and I may well do a part 2. So here we are, guys. This is part 2. So I have another 5 companies for you today, and as you know, I'm not a financial advisor. This video is made purely for entertainment purposes. So just because I don't like these companies going forward, you may see some potential in them. So it's important that you always do your own research. And as always, if you enjoy this video or find it useful, or you just want to help me out, then please go ahead and hit the like and subscribe to my channel if you haven't done so already. It really is appreciated. So we've got 5 companies, so let's get into it. So the first company up here is a stock called Superdry. You may or may not have heard of Superdry. It is a big clothing company, UK, Europe and internationally. It has like Japanese letters on the clothing, and they have a lot of shops, okay, generally quite empty in terms of people inside, and don't really have much of an online presence. As far as I'm aware, I've never really gone onto a Superdry website, okay. Their market cap sits at 134 million, so it's quite a small cap stock. But over the past 3 years, if we look at their share price, it has been declining, okay, year after year. And if we go back to January 2018 here, it hit highs around about of £20, just over £20 per share. And now it's trading at £1.64. So if you have been holding on since back then in 2018, then your portfolio is probably not looking too good with this one in it right now, because it has absolutely taken a hammering. And even at this price here of £1.64, it is considered overvalued by analysts at 152%. So the fair value considered to be 65 pence, which shows that it probably can continue to decline and still be overvalued for quite some time. In the past 5 years alone, this has had a negative annual earnings return of minus 54%, okay, year after year. That is its annual earnings return right there. And it has been making a loss since early 2019. So even before this pandemic, it was making a loss. We know retail has been hit hard this year, so it's probably only going to continue to get worse. And it is now currently at a minus 20% profit margin, with a debt to equity of 240%. So the debt to equity is huge. It is making a loss. The share price is declining. So unless they do something big, you know, they boost their online presence or they just do something new, then I can't see things looking too good for Superdry long term. So the second company on my list here is a company called Macy's. Now, Macy's is another company here in the retail sector. However, this is a US company predominantly. It's not in the UK. So it has over 775 locations, a massive retail company, kind of like a department store, and it has a market cap of 2 billion. So it is a very big company, which has taken a hammering in recent years. Okay, over the last 3 years alone, it was at highs of $41.82 back in July 2018, and now it trades at $6.57. Okay, so ridiculous drop there in price just over the last 3 years alone, and that is a 5-year average earnings actually of minus 33.6%. 5-year average earnings growth declining of minus 33%. So that is quite a big decline. It's making a loss as well, not to be surprised, of minus 17.6% profit. So a big loss there, and like I say, same as Superdry, we're in the retail sector here, and if it's been hit hard, it's not going to be a surprise, with a big debt as well of 231% as of 2020, and won't be surprised again to see that continuing to go up. So it is struggling right now. It is not a company that I would invest into anytime soon, or at least in the next few years, unless they do something massive to turn this around. I'm definitely avoiding this one. So the third stock up here is in a completely different sector, and that is the energy sector, another sector being hit hard. And this is a company called Apache. Now, they're in the oil and gases, and we know moving forward, the world is going into renewable energy. So I won't be surprised to see this continue to drop further. It's got a market cap of 3.2 billion. So a very big market cap. And it's quite a big company actually, because in the last 5 years alone, it has been falling and falling. Look at this share price. It was at $67 per share back in 2016. So just 4 years ago, $67. Now it sits at $8.50 per share. So a massive drop off in price, continually dropping in the last 5 years. And I won't be surprised with the new election and everything else going on, this to continue to go down even further in recent and in the future, okay? It's got a future return on equity predicted by analysts of minus 15% in the next 3 years. So they're not predicting anything good for this company really in at least the next 3 years, which as a shareholder is not something I'm interested in. And they've been making a loss since 2019, and it's currently at a profit margin of minus 167%. That is not just a loss, that is a huge loss. Not to mention the debt to equity here is absolutely huge, almost sitting at 9 billion. This is one of the biggest debt to equity ratios I've seen, and it is making a huge loss. There is not much good news really for this company unless you're maybe a day trader and you're trying to pick up on some of that volatility. As a long-term investor, this is a company that I am definitely avoiding. So my fourth company up here is a very popular company and probably one of the most popular ones when it comes to UK investors. And we are talking about Rolls-Royce. Okay, I spoke about Aston Martin in my previous video, spoiler, but now we're talking about Rolls-Royce. And this is not the car company. The car company is actually BMW. This is an aviation company in the aerospace and defense sector with a market cap of £5.8 billion. It's actually the 12th most popular, I think, on Trading 212, or 12th or 13th, something like that, so it is extremely popular. However, in the past 3 years, we have seen the share price dropping and dropping year after year. It was at £10.94 per share as of August 2018, and now it's at 70p per share. So if you did get in at £10.94, you are sitting on huge losses right now because it's at 70p. And in the last 1 year, it was at £7.80, and as I say, 70p. So even the last year alone, it has sold off massively. And over the past 5 years, this has had a past performance, annual earnings growth of minus 21.5%. Okay, so year on year, the earnings is dropping, and that's its average right there, minus 21.5%. It's actually sitting at a loss. It's making a loss right now of negative, almost 40% loss. It did briefly go into profits in 2018, but other than that, in the last few years, it has continued to make a loss. So it's not looking too good on its in terms of its financials. And debt-wise, it has 6.5 billion debt to equity, which is massive, and that is a debt to equity ratio of 80%. So it is making a loss. It has been for the recent years, and then a massive amount of debt. The only good thing really about this company is kind of one of its only type in this field, and lots of insiders have been buying. I do have to put that there because that is a really good thing I like to look for, insiders buying. However, for me, this is not a long-term investment. It's not been looking good over the years. It's just continued to make a loss in terms of its share price and its financials. So for me personally, as a long-term investor, it's not for me, and I will definitely be avoiding it. So my last company up for this one today is actually quite a small market cap stock, and this is 399 million market cap, and that is called Capita. Capita is actually a tech company developing business process management, and it provides software to different clients, consulting and stuff like that. So considering this is a tech company, it's quite odd to make a worse stocks to buy list because tech is generally really good. However, Capita has not been doing good at all. If we look at its current price, it is 24 pence per share. So it's a really cheap price. But back in 2016, so 4 years ago, it was trading at £12.83p per share. What an absolute sell-off over the past 5 years. Look at that share price graph, it is absolutely ridiculous. And even at this price of 24 pence, it is considered overvalued by analysts of 139%, with its fair value being 10p per share. So I wouldn't be surprised to see this continue to sell off and try and get nearer to that fair value. It is actually making a loss, which is very rare for tech companies because they don't have much overheads, but it is a loss of minus 2%. So that's not good to see. I don't want my company to be making a loss, but the debt is huge, okay? The debt is absolutely huge, of £1.4 billion, which is almost about over 3.5 times what its actual market cap is its debt to equity. So a huge amount of debt, making a loss, decreasing share price. It's not looking good, and this is definitely a no from me. So yeah, that's just my 5 companies today. Like I said, I've done 5 before in a previous video, and I have a long list of companies that I love. I've done loads of research on, and I also have a long list of companies that I really do not want to buy. There are a few more on that list, so let me know down below if you want me to do like maybe like a final part to this and put in another 5 companies there that I have researched and I do not like, okay? But just because I don't like these companies, it doesn't mean they are bad buyers. You may be invested, you may well want to invest, and you may well make money, okay? But for me, I want to invest in companies that I see good potential and good prospects going forward, and it just isn't there at all with any of these companies, okay? But that's not to say that you can't make money from them. So you should always do your own research. So as always, guys, thank you for watching, and I appreciate if you could hit the like and subscribe to my channel if you haven't done so already. And let me know in the comments down below if you hold any of these, if you're planning to buy, sell, etc. Let me know. Thanks for watching, and until next time.